Hi, and welcome back to the WHVP podcast. In this episode of the podcast, the WHVP team will be discussing the topic of the corporate global minimum tax. We'll also be discussing the rumors of Swiss shoe company On and their possible IPO, or initial public offering. In no way are the companies that we discuss in this podcast investment recommendations. Let's get into it.
The rumors about the IPO and about On Shoes as a company itself, which is a very interesting development in the sport shoe environment, because the whole shoe market itself is already a huge market and very competitive. So it's very, very difficult to get in as a new brand, which nobody knows. And I think On did a very good job with that.
Yeah, incredible.
Yeah, they didn't. I really admire their boldness for like going out into the market, and that it worked out is even more incredible. Because here, if you go to like a running race event or something, half the people wear On shoes because the shoes really are great. They look quite nice, I think. And people just love the concept, and I think the whole company has done such a good job in building itself up. I mean, it only started, I don't know, like maybe 10 years ago or so,
I think so,
plus minus. And they have only really become like big in the past, I don't know, 5, 6, 7 years. So yeah, I think there are fascinating case of like the startup scene in Switzerland and what great new companies and innovative companies can come out of it.
Yeah, and another point is that often if you think about Switzerland and companies that may arise out of Switzerland, you think about like finance companies and everything that has to do with finance, or maybe a little bit with technology from the ETH. But a company like On Shoes, you wouldn't expect that from Switzerland, and that's the beauty of that, I think.
Yeah, I think what I like about On Shoes, to add to your point of, you know, when people think of Switzerland, they think of the finance industry and financial services. Also, they think of the watch industry and luxury goods. And I think On timed it perfectly, not just timing, but also the idea of realizing, hey, people look at us as a luxury goods maker. So we can create a shoe that, as long as it's quality, it's going to be a really good testing ground in Switzerland, because if the Swiss population get behind it, when the tourists come and they say, hey, what are these shoes? What's going on? Like, what is this? And they like it, it looks quality, then they start to buy it almost as a luxury good.
Yeah.
And I think that's really
absolutely
good.
And also how they like incorporate the Swissness into their brand with like I now on YouTube get their ads all the time where they talk about like how the Swiss Alps are the perfect place to like try new shoes, because if they hold up there, they will hold up everywhere. They also have now trail shoes and hiking shoes and all of that, and also how they use Roger Federer as like a brand ambassador and an investor. I think that was fantastic as well with the Roger shoe that he brought out. I think that is really really well done.
Yeah.
Yes, I agree. Yeah. So I think it will be very interesting to follow this company and whether there is an IPO or not.
Yeah.
But the shoe market is a 60 billion market, and it's to have a reasonable share in this like cake that's very challenging, and we will see whether On will make it to the top sellers in this small world.
But do you necessarily need like a main part of the pie? I mean, if you are like a niche provider, you can be very successful in that as well. You don't necessarily have to be the number one to be successful.
No, not necessarily, but I don't say that they have to, but it will be interesting whether they will become such a player anyway, because On Shoes, they have also been awarded or shown at the Super Bowl.
The Rock came in wearing it. When I first saw that, I mean, it was just really like a half a second but I saw it, and because we're living in Switzerland, because we know on shoes, I knew it immediately, and I thought, oh, some money changed some hands. Everything in the Super Bowl, as an American, everything is planned to the minute detail. I mean, you can go back to scandals that happened in the Super Bowl, and you find out later it was all planned, everything. So when I saw that, I thought, good move, good move. It really reminded me of the history of Puma and Adidas when they were trying to get market share way back in history at the Olympics, and they started just giving Olympians their shoes to try to compete, and then it was amazing. When I saw it, I thought, good move, good move. Definitely.
Yeah, it would be interesting to see how it develops. I mean, it is now rumored that they potentially will IPO in fall at the New York Stock Exchange. So we'll see if that will happen or not. I think most likely it will happen at some point. Not sure if it will be that fall or maybe later down the line. But yeah, fantastic company, very well done, and it will be interesting to watch how it will develop.
Yeah, that'd be really cool. Cool. So we're going to jump into our topic of the G20. This was about a couple weeks ago. All the G20s decided that they were going to join in on the global corporate minimum tax. So we're going to talk about that instead of just the G20, because we'll talk about the effects of what this global corporate minimum tax is, what it is, a little bit of the history of taxation, especially in corporations. So I'll just give a quick description of what the global tax minimum is. It's a two-pillar tax reform that was presented they've been talking about it for quite some time at the G7 and G20 conferences, and there's been rumblings about a corporate minimum tax for a couple years. But now they've all kind of signed off on it. It's got two kind of basic pillars of the tax reform, and the first pillar is going to focus on really large companies that are making with revenues of over 23 billion US dollars a year, and they're going to be facing it looks like a tax if they make over their 10% margin. Of that 10% mark, that any money over that 10% margin, they're going to be facing 20 to 30% of that income will be taxed. So there are some exclusions in that. Again, those are huge companies. If you're making that kind of revenue stream, it's a really big company. But like oil, gas companies, some financial service companies, even mining companies will kind of be excluded from that part of the corporate global minimum. So that's interesting as you look at kind of hard commodities and certain services that they're gonna kind of steer away from. So that's an interesting development that I found. And the second pillar of the tax reform is that global minimum tax for corporations, and that's for companies that are making over 800 million US dollars roughly. And there's three main rules that apply to that. That's the income exclusion rule, where foreign income earned, income inclusion rule. I think I said exclusion. Where income is earned, that's where it's going to be taxed. So if they're headquartered in the United States and they're earning a lot of money in Bulgaria, they're going to get that earnings is going to be taxed in Bulgaria. Obviously, there's going to be some deductions. I think of about 7.5% for the first couple years of your tangible assets, so workers, buildings, factories, kind of that stuff. You'll get a deduction on that, those pieces of the earnings, but eventually they'll reduce that to, I think, 5% after the transition period. So that'll be interesting to see how they give a little bit more and then tighten it up later. And so then the next rule is the under tax payment rule, which allows a country to deny deductions for companies trying to shift money out of their jurisdiction back to their headquarters. So they'll be able, it basically gives the country more power of the money of what's being earned on that company inside that country, so they can't shuffle it to different jurisdiction, like in Ireland, where Apple has a huge headquarters and they, shuffle money in and pay lower taxes on it. And then the subject to tax rule, which is just the basic rule of where the money is going to be taxed and where it's subject to be taxed. So that's kind of the definition overall. The tax that they decide at, the rate is 15%. So that's the minimum, saying everyone's going to have to do 15%. So the history of taxation and corporate taxation is actually relatively new in the Western world. The states first started taxing corporations in 1909, so about 111 years ago, 112 years ago, they started taxing corporations. In the UK, they actually didn't start with a proper corporate tax on corporations until the mid-60s. So England has been very late into the game, but I think it's something that's, I don't know how to say it. Corporations are part of an economy and keep things running, so there was a reason they didn't tax it. If you look at the states and in corporations in the early to maybe the 1940s, personal income tax and corporation income tax were paying about the same percentage of what the U.S. was bringing in as tax revenues. And since then, it's dropped, and it was around 40%. They were doing 80% together. It's stayed, the population of the United States of income tax, they're still paying around 40% of the revenue, a little bit higher. Corporations are only paying 6% of the government revenue at the moment, roughly. And so there is, when Janet Yellen came out and said there's a race to the bottom, there is some discrepancy in how much corporations are paying as far as revenues towards the government's or revenues from taxes. So that's kind of the history of taxation. This, though, is historic in the fact that it'll be the first time where the whole world says, okay, we're going to tax corporations. A global movement. It's kind of the crescendo of globalism at this point, seeing if they can pull off this huge project of getting the world to tax this minimum.
Yeah, maybe I can pick it up from there, what you just said with Yellen's comment on the race to the bottom. I think I will be talking about the few main advantages that we see from this move. And that's basically the main advantage, or the thing that has been said over and over again, that there's no winner if you're just gonna undercut each other for the next, years and decades to come, that in the end all the rates will be so low that no one is gonna earn any tax revenue at all. I think that is really the main advantage that the people or the people at the G20 and the G7 are keep on repeating. Then the other thing that we discussed earlier here, coming to the office actually, is that there's an idea of fairness behind it, that it will make it fairer if companies have to pay the same level at any country they are in. And then the third advantage that we discussed, I think you brought it up when you walked in here. What was that again?
It was if you earn more tax income from the big companies,
right,
that you might be able to lower the individual tax rate overall.
Exactly. Yeah, so I think those are the three things that we see, is stopping the race to the bottom, increasing fairness overall throughout the globe, and then the third, maybe lessening the tax burden of individuals in that sense.
Yeah. Well, there are also quite some disadvantages from our perspective, or from my perspective, that should be taken into consideration, which is that the decision making should still be with the countries and the governments in the different countries. And if you start such a movement that a super national organization defines how you have to structure your tax system, the question remains, when will it stop? Because after a couple of years, when everything is settled, they might find out it doesn't have the effects they wanted it to have. So we have to regulate even more and say, okay, now we have to define the value-added taxes. It cannot be lower than 15% either, or stuff like this. And that brings me to another disadvantage, that it isn't thought through from my perspective, because of course you can regulate the corporate tax, but there are many other taxes and there are many other ways to make the environment for a company attractive in your own country. And this can also be the value-added tax. It can also be other benefits, or maybe also direct payments back to the company after they paid their taxes. So, and with that, my third point is that when you bring in this minimum tax rate of 15%, the effect will be that there will be more government involved in this whole process, which makes the whole thing more expensive for the economy at all and for the people. And these are questions or disadvantages that should be considered when making this decision, where I think they haven't taken into consideration far enough to really make a fair point. Yeah, we're going to do that until 2023, because this time horizon for such a huge project is far too short from my perspective.
Yeah.
But I think there's even more disadvantages than the three that you mentioned.
Of course.
I mean,
I wanted to limit it just not to overboard with disadvantages. But
if I might add, I think there's two that I think are very important for this. Of course, like we could talk for hours and days probably, but I think one is that the states or the governments have less incentive to be efficient with the money that they receive, because if they could do it with 11% tax rate, but they know like they will get 15, they will use the 15%, of course.
Yes.
So I think that's a huge problem. And then the other problem is just from like a moral standpoint. In my opinion, it's just a bit of bullying from like the influential large countries that have, like for example, the US or Switzerland. Those are countries that have enough going for them to attract companies. They have the workforce and all of, like, we don't have to go into details, but they have a lot of different things. Smaller countries might not have that many options to attract companies in their countries. So taking that advantage away doesn't really seem fair from my perspective, because if you as a larger company want to have a 15% tax rate, great, go for it, do it. But then you shouldn't take the competition out of it and force everyone else to do what you think is right.
Correct.
Yeah, definitely. I mean, for a huge market like the US, it's not really a choice for a big company whether they want to be in that market or not. They have to be in that market. So of course the US can say and make whatever they want, but a smaller country like Ireland, who is not very necessary for a big corporation, doesn't have this advantage. So they have to provide other advantages or benefits for the company that makes it worth to invest in that country.
Yeah. I agree with your point that it feels like bullying. I would almost say it's bullying with virtue signaling. I'm saying with these big economies, you know, I mean, I don't remember what politician came out and said it. It might have been Yellen, but I don't want to say exactly which politician. It was a U.S. politician that said, you know, we have the workforce, we have the education system, and now it's time that the companies pay their fair rate. And I thought, hey, that's, you know, for a country like Ireland who has struggled, you know, Ireland's a great point. They've struggled for thousands of years to get things going, and now they've realized, hey, we have a strategy to try to bring our population income. And so be it if the government loses a little bit of money, you know, and I think that's a very valuable point of understanding that, yes, the advantage of, hey, maybe it'll lower the income taxes for individuals, but if we look at the case study of the United States and the history, taxes started out, if you were making $0 to $20,000 in the early 20s when it started, you paid 1% tax. 1%. Yeah. You know, that's nothing. Essentially, that was like if you were making $0 to $111,000 a year, that's what it would be today. You're paying 1% in your taxes. has that reduced? Have we seen taxes reduced on individuals or increased?
Yeah.
Increased. And I think that's, you know, as you brought up, this more regulation, it's the government's job, that's their role if you look at them as a business, is to be bigger as a government. That's capitalism. We grow and we grow. And so the moment government gets something, usually they don't rescind it. And I think that's the challenge in this is, will they handle this with poise, and will they handle this with correct action? And that's the question we'll have to see.
I think from my perspective, I would say the vast majority of people would agree that a company like Amazon should be paying taxes. I think that's not really a controversial point, and they're right now probably not paying their fair share, and that's not all right. But this way that the company or that countries are now proposing to go is, in my opinion, not the solution. So while I agree with the problem and I see the issue that we are facing as a country, not as a country, as the world, I don't really think that the way that the G20 and G7 is proposing to go will solve that problem in a manner that will be beneficial to all of us. Yeah. So for me personally, the disadvantages definitely outweigh the advantages.
Yeah, I think the point there is the question about the legitimation. Because who elected the G20? Who said that they have the power to do such things?
Yeah. And
we, in a democratic country, we are used that we elect a government, that we elect the people who make the decisions. Yeah. And if you get to the point that there are 100 people being there from today to tomorrow and saying, okay, now we are here and we are going to decide how the world is ruled, that's not a healthy way, because there are no limitations, there are no boundaries. You can't say where it does stop. Maybe tomorrow they come and say, okay, you can't, I mean, they already do this kind of stuff when it comes to individual taxes. They say, okay, it's not fair that you have maybe rich people that pay like in a percentage less than like less rich people. But if you have a broader view, if you see what do these people contribute to an economy, what kind of money they are going to spend in an economy, and what kind of jobs does it create, it's a total different story.
Yeah, and I think to bring up that point also is, and it's not, I don't say this, I think that's a very good point, of we have to make sure that people who are earning money are paying their fair share in taxes. Yeah. If you look at that in the States, people who are earning over the kind of that $400,000 a year mark, which is good money, they're paying 39.5% in taxes. I mean, that's the reality. And it's, I was reading an article that said something like, so 25% of the United States taxpayers don't end up paying any taxes at the end. They either get a refund, I mean, of personal income tax. Of course, they pay their, Social Securities, and those are taxes that happen. However, there is, that percentage of the lower half where tax systems today are pretty progressive in the West. There are definitely countries that get away with the rich population, not paying taxes. However, you also have to understand, the Jeff Bezos, the people, they're paying 40%, 39% of their income each year, and that's big money. I mean, that's real big money that they're providing to the U.S. government. Just as looking at the States, in Switzerland, I know it's very similar in the tax system, where if you're earning more money, you're paying more taxes. And people need to understand that, because often politicians or people, they talk about how the rich have to pay taxes as a way to up taxes for everyone. But the rich are already paying in the States and in Switzerland much higher rate than people who are earning less.
Yes, definitely. And there is a interesting fact, especially, or which I'm aware, especially in Switzerland, that there are companies owned by families, or mainly owned by families, but also listed on the exchange. And there that they will pay out every year a certain amount of dividends, because these families needed to pay their taxes.
Yeah, it's the same. I mean, it's the same in the States. I know a family that, they're an S corporation, and they pay their dividends out because that's where their tax money is required. It's from the shareholders, and I think that's valuable. And so, again, coming back to disadvantages, advantages of things, I agree with you, Jamie. And I think there's there's too many disadvantages, especially when they're trying to push it through so fast.
Yeah.
Governments don't move fast. The point of democracy or a republic is that the government moves slow, and to push something so fast at a global scale, it'll be very, very interesting to see how it plays out. I think they'll have to push that date back. And
they probably will.
Yeah.
But still, I also think that they misuse or hide behind the pandemic a little bit, because everything has, like, the whole game has been changed on a worldwide scale through the pandemic, and it doesn't really sit well with me to use something that has been collectively traumatic to everyone and anyone, and then hide behind that to try to push change too fast.
I don't remember what world leader said it, but it said never let a crisis go to waste.
Yes, exactly.
And I think it was even, I don't want to say. But yeah, but it is something that people need to be aware of it, that there's things that move. If they're moving quickly during crisis, people need to try to pump the brakes on their government, or at least try to make some noise. And it'll be very interesting to see what happens.
Yeah, another interesting point, which I'm wondering how they're going to deal with it, is how they deal with this threshold. Because basically what this 2-pillar system means is that these rules are applicable to, like, the large companies. But on the other side, if you're below that, there's still the chance to go with zero taxes. And I think that this will also be a point where in 2-3 years they're going to say, okay, now we have to lower this threshold.
Yep. Yeah, I think that's a very, very good point. I think you tapped into something that is what is concerning. Often the big issue, especially even coming back to the ON issue, that we're so amazed at what ON did, because they broke through those barriers of entry that the other large corporations had set, and they're doing something that's unprecedented. And now it feels like there could be more barriers to entry now set by the government and not by the quote mark free market of other large corporations that really kind of set those. They're not monopolies, but oligopolies for sure, that kind of get together and set these barriers to entries. And now there's going to be 2 sets of barriers to entries, 2 gates that companies have to pass through, and it's a big challenge. Thanks so much for joining us today in this week's podcast. We hope you found it informative. If you have any more questions about what we do as a company, or have questions about the topics we discussed, please feel free and reach out to us by going to our website at WHVP.ch. You can also check us out at any of our social media platforms on Facebook, LinkedIn, or Instagram by searching WHVP.